Election years are exciting, but for many there are fears and concerns about election outcomes. Should we change our investing based on these elections? What if this party wins or the other? How do elections affect investing? Hi, I'm Freeman Lindy. I'm a certified financial planner, a licensed tax expert, and I've helped dozens of couples over the age of 50 to retire successfully and stay successfully retired. We do that through teachings here in RetireMentorship on YouTube and through our Vodcast and podcasts, and through comprehensive financial planning through my financial planning firm, Lacrosse Financial Planning. You can find out more about our educational content at retirementorship.com and more about my practice at lacrossefinancialplanning.com. Today, we want to talk about a few different things. Number one, a principle of investing that I think we need to keep in mind as we discuss elections and how they affect our investing. Number two, we want to talk about what the government can and can't do, as I think some people think that there's more to it than there really is. Then, of course, we want to look at the effect of elections on equities. And then finally, the effect of political parties on performance. And then lastly, be sure to stick around to the end where I give you some of my personal thoughts on politics, which I know you want to hear, or at least are curious about if you're a client. What does Freeman exactly think about politics? So make sure you listen or watch all the way to the end. You can find the charts and graphs that we'll talk about either on the YouTube or Vodcast video feeds, or if you're listening, you can always go to retirementorship.com/177 and we'll have all the show notes and transcript there. So first, here's a primary principle we need to remember when we're discussing elections and their effects. And that is that we invest in companies, not governments. Right? We are co-owners of the best businesses in the world. Right? We don't invest in the nebulous stock market. We are business owners. These companies employ the best people. They have the best leadership teams and the best employees. They offer the best services and products. And those leadership teams are always going to make decisions to maximize long-term profits, regardless of who's elected, regardless of who's in office. Right? It doesn't matter because we don't invest in the government. We're investing in these businesses. And regardless of who's in charge, whether they're elected or they're in charge for 4 or 8 years, they're going to work to maximize those profits. And by that I mean those who follow my teachings and clients of mine, right? We don't invest in governments. We don't buy treasury bills. We invest in businesses. And in a free market like the one we live in, companies are affected but not controlled by the government. Right? And so yes, there is some effect of elections, some effect of governments on our businesses, but ultimately they're not controlled by them. So how does the government affect our businesses? How does it affect our financial planning? That's the next thing we want to look at, right? How does the government affect financial planning? And so I think there are some misunderstandings about what the president in particular and the government in general can and can't do. Right? I've heard things from people like, well, when Trump gets reelected, he'll fix the interest rate problem. Or when Kamala gets elected, she'll fix inflation. Or when X gets elected, the market's going to crash. Or when X gets elected, the market's going to surge. And so here's the thing, right? What does the president actually control? How much of this is in their power? And so does the president control the stock market results? No. Right? The president alone has little effect on the stock markets. The government acting together, right? Congress and the president can intervene in the stock market, most commonly in bailing out companies or industries or stimulating the economies, right? We saw that with the great financial crisis and with the COVID crash. But the outcome of Congress is more important than the president regarding the stock market, right? Who gets elected in Congress and what they can actually do is more important than the one person that's in the White House. Does the president control interest rates? No. Again, if someone's saying that, hey, this president's going to fix interest rates, that's not true at all. Interest rates are controlled by the Federal Reserve, and they do it in response to economic conditions. Right? And the Fed is not controlled by Congress or the president. And for a good reason. There's a specific division of power there so that it cannot be weaponized as a political arm. And anyone who tells you that a president will either fix or ruin interest rates is just naive. Does the president affect inflation? Not directly, right? major policies can spark inflation. Congress sets laws, and the president can either approve or veto those. And those laws, those policies can affect it, can spark it out. But when it comes to quashing inflation, that's really the Fed's job. And they do that through interest rate controls. And again, the president doesn't control the Fed. What about taxes? Does the president control taxes? And this is the only one that's like, yes, with Congress, they do, right? Congress creates a tax bill that the president ultimately approves. They tax individuals, they tax businesses, and those things can alter our returns in the short run. And so in that sense, the government indirectly affects your financial planning, but not so much through the stock market as it does through taxes. And here's the thing, right? Your equity returns are the largest wealth builder that you have. And those are mostly unaffected by the president. We'll see that in a little bit. We'll get to it. Interest rates, right? Those affect your fixed income returns, your savings, your emergency fund, your 2 to 5 years of expenses. But those are a lagging response to economic conditions, right? Those are not controlled directly by the government. Inflation is the principal problem that retirees face, right? We covered this way back in episode 2, and I hammer this all the time in my book, 3 Retirement Income. But the cost of everything you want and need to buy will double or triple during your retirement. And the difference between them either doubling or tripling may be influenced by the government, right? But it's not controlled by the government. And whatever story you believe about which one's going to cause more or less inflation, it's just a story. Taxes are the government's biggest effect on your financial planning. More than stock markets, more than interest rates, more than inflation, taxes. And so I'm much more interested in the outcome of these elections regarding taxes than stock market performance. And frankly, you should too, right? That's what I'm most interested about in the outcome of these 2024 elections, is how it's going to affect taxes, not how it's going to affect our investing. So what is the effect of elections on equities? That's what we want to know, right? Do they affect investing? This is what you've been waiting for. It took me X long to get here, but here we go. Will the markets fail after this election? Will they surge? Does it depend on who wins? That's the question we're trying to answer, right? Morgan Housel, who's the author of Psychology of Money, said that every forecast takes a number from today and multiplies it by a story about tomorrow. Every forecast takes a number from today and multiplies it by a story about tomorrow. If you, or people you listen to, are forecasting an election impact, they are multiplying today's value by a story about tomorrow that they believe. And there's no evidence that something about the future is going to happen for sure, right? There are no facts about the future, but we can learn from the past, right? And yes, past performance is no guarantee of future returns. We all know that. We all believe that, of either future returns or future losses, but it is a guide. And indeed, history is the only guide that we have. And so how will this election affect the markets? We don't know because it's in the future. But how have past elections impacted equities? That we do know, and that we should look at, and it may give us some insight into future ones. So we looked at the last 20 elections, all the way back to World War II when Truman was elected, and it looked at the S&P 500 on October 31st, right the close of the month, right before election happens, and then December 31st, 2 months later, right? How does that fare? I don't really care what happens the day after an election. I really how does it shake out over the next 2 months between basically the last 2 months of the last presidency, right? And again, you're going to want to look at these charts. You can go to retirementorship.com/177 or switch over to the video so you can see these. But here's the deal. 75% of the time, the market is up 2 months after the election, right? 75% of the time, the market is up 2 months after an election. 2 out of the 5 times it was down by less than 1%, which means that you have an 85% chance of the market being flat or better 2 months after an election happens. The last 2 elections that were actually down were 2008 and 2000, and those markets were already declining before the election happened, for the global financial crisis and the dot-com bubble bursting. So neither of those were actually caused by an election. And the other was way back in 1948, and I frankly didn't bother looking at why it was going down. So in conclusion, right, pulling out of the market for fear of the market dropping after an election is super risky because it doesn't really happen. But does the winning party impact those equities, right? How does what does it matter if Democrats win or if Republicans win? And the answer is no, it doesn't. The average 2-month return for what happens after an election, when a Democrat is elected, the average return is 2.7%. And when a Republican is elected, the average is 2.9%. Both up, right? They both grow by about 2.5%, 3%, regardless of who's elected. The recent negative returns, again, the 2008 and 2000, one was a Republican being elected, one was a Democrat being elected. So it doesn't matter. So in conclusion, right, pulling out of the market based on one outcome or another is also risky. So if you're going to do it in general because you fear the outcome of the election, or you immediately start doing it because someone got elected and you didn't want them to, both of those are extremely risky. Right? Elections have no direct significant impact on equity investing. Again, we invest in businesses, not in the government. So who leads the government shouldn't change that. Stay the course. So maybe the elections don't affect it, right? But surely presidential terms do, right? Surely who's in office for the full 4 years or 8 years, surely that matters more than maybe the immediate aftermath of an election. So now we want to look at the power of political parties on performance, right? The effect of equities after an election and the power of political parties on performance. How was that for alliteration for you? I can't even say it. Many think, right, that one party or another is the source of all good or bad returns, right? So we're going to show you a graph of the annualized S&P 500 returns by president for the last 20 terms. We'll put that up on the screen. Pause the video if you need to look at it a little bit further. Go to the blog to see it. But I want you to notice a few things. We'll actually have it up a little bit as I'm talking here. Number one, it's overwhelmingly positive. It doesn't matter who's in power. Businesses do well. They find a way. And number two, it looks fairly even by party, right? You can't immediately see who does better or worse based on who's in power. And again, pause this video if you want to look at it further. Find the graphs at retirementorship.com/177. We'll probably put it on socials as well. But let's look at it by performance on $100,000, right? What does it do to $100,000 over the course of a presidential term? And so here's those. Now, so something to watch, right? One of each party doubled the money over 4 years. It's crazy. 3 out of the top 5 are red, but 6 out of the top 10 are blue. And here's the thing, right? Inflation also plays a factor in this. $100,000 is not worth $100,000 by the end of any presidential term, let alone several of them. So let's adjust for it. And if we adjust for inflation, what are the real returns over the course of a presidential term? It rearranges the leaderboard, but it still remains pretty even. Trump has the best returns, but it's followed by 4 Democrats. And Biden's still going, so he could also crack the top 5 by the time his presidential term is over. And so if we look at the averages, right, if we just take a straight average of the terms of different presidents, on average, when a Republican is in office, the average returns, total return over that 4 years is 17%. And when it's a Democrat, the average total return is 32%, right? These are not annualized returns, this is total return. But here's the thing, right? If forecasts involve a story about tomorrow, then we also have to look at stories about yesterday. And so we get a lot of objections by Republicans when you just look at the numbers just like that, right? And here's a couple of them, right? Clinton presided over creating the dot-com bubble, and then in the end of the 90s, and then handed that off to Bush right during the collapse, right? So Bush was elected right at the top of the dot-com bubble burst, and so there was a bunch of negative returns right there. And then he got hit on the backside by the global financial crisis. And neither of those were caused by the government, not by Clinton, not by Bush. So it's just really bad timing. That's why Bush's returns are so terrible during his office. And then they'll also point out that, Obama got into office in January of 2009, right before the market bottomed out in March. So his first term was nothing but recovery from the bottom of the market to the top. And that is a real principle, right? We got to be careful about where we're measuring returns from. That's why I never like looking at since inception dates when comparing mutual funds, right? You can have the exact same fund that's constructed the exact same way, and if it was created January of 2007 versus January of 2009, there's going to be a huge difference because it depends. One was measured from here, and the other one was measured from here. And so let's say that we acknowledge these things and we subtract them. So let's subtract Clinton's second term, which created the bubble, or the bubble was being created during it. We'll subtract both of Bush's term, and we'll subtract Obama's first term, since it was just nothing but up. And so if we do all that, if we take out all those anomalies, basically all that stuff that happened, then on average, Republican presidents had a 25% increase, and Democratic presidents had a 25% increase. I kid you not. Which in conclusion means that aside from these global catastrophes, the returns are even, right? And I think what it really proves that the propaganda, especially that I hear a lot, that Democrats are bad for the stock market is just plain wrong. When it comes to real returns, the returns of Democratic or Republican presidents is the same. So here's the thing, right? Beware of propaganda. Fears about, there's a lot of fears about one party winning or another. And if you have those, I would just ask, who are you listening to? Right? The media can deceive you without ever lying to you. And they can do this in two ways. They can do this through volume, and they can do this through emphasis. Right? The volume of coverage that they give to something can deceive you, even though they never actually lie about any of it. For example, CNN could say, hey, Biden had a memory slip this past week, but did you see how evil Trump is? Right? And they can spend 20 seconds reporting on Biden's memory slip and 20 minutes reporting on all the shady stuff that Trump did. On the other hand, Fox can say, oh yeah, Trump had not a great tweet this week, but did you hear how evil Harris is? And again, they spend 20 seconds reporting about something Trump did and 20 minutes reporting on what the other side did. So just in the volume of what they cover, they can deceive you and make you think that one side is fine and the other side is horrible. The other thing that they can do is emphasis, right? So Fox might say things like, oh, here's a ton of migrant crimes. They're just going to really focus on that and make that a big emphasis of their broadcasting. And they just totally disregarding the fact that crime stats are falling. Or the CNN can make a big deal about the Republican tax cuts and how they're making billionaires richer and cutting taxes for billionaires while ignoring the savings for the middle and lower classes. So what they emphasize, even if they're not actually lying about any of it, can make you believe one thing or another. And here's the goal, right? They're trying to make you fear the other side. They're not trying to get votes for their side. They're trying to make you vote against the other. They want you, hey, maybe you don't like your candidate, but we're really going to make sure you hate the other one so that you vote for the lesser of two evils. And then as far as the other side goes, again, they know they're not going to convert anyone, but maybe they can make the other side doubt enough to not vote for that side, right? So if X is going to get elected, then you're going to be taxed and the stock market will crash. So vote against X or minimally just don't vote for them. That's their goal. And so here's a question for you, right? If you watch a lot of this stuff, are you informed or are you brainwashed? If you get all your information from one side, are you informed or are you brainwashed? I contend that you are willfully brainwashed, right? That they are deceiving you without lying to you. If you truly want to be informed on politics, on economy, on things that are happening, right, I recommend a 60-40 split, right? 60% content from your side of the aisle, 40% content from the other. That's the minimum split, I think, for you to be informed and not brainwashed. I'm probably 40-60. I'm the other way. I already know my side, my positions, so if I consume any content, I actually spend more time consuming content from the other side because I want a more balanced perspective. Or an even better recommendation would be to do the 0-0 split, right? Where we don't listen to the news or politics at all. That we review politician stances in the month leading up to an election and we vote, right? But then we delegate the politics to the politicians and focus on our own lives the other 47 months of the year. And you may be asking, like, why am I talking about this? Right? Why am I foraying into politics at all? And there are three reasons. Number one, focus on the locus. There are two different ways that we can view life. You can have an internal locus of control, where we think what we do has a big impact on our life, or an external locus of control, where we think our life is controlled by outside factors. Right? And your locus of control has a huge impact on your happiness and success. If people who are obsessed with politics often have an external locus, right? They believe that politicians and who gets elected and what happens in the election will have a massive impact on their lives. And the most politically minded people I know are the most angry and the most unhappy. On the other hand, people with an internal locus of control focus on their life, their family, their community, what they control, what actually matters, what they can influence, and they tend to be much happier. Maybe if we all delegated more politics and to the politicians and focused more on our own lives and ignored the outrage machine that is the media and that is the news, maybe we'd all be more happy. And number 2, fear is not a friend, right? Politics and media, they stoke fear. And fear of all kinds makes you a worse investor. So don't let the stories of tomorrow and of the other side drive you to fear, and let those drive your decisions, because they will be bad decisions. And number 3, don't stop the symptom, cut off the cause. Right? I'm here to help you be a better investor. Right? I'm here to help you retire successfully and stay successfully retired. That's the mission of this show. That's the mission of my whole career. And politics and elections causes people to make bad investing decisions. Right? We cover that in the 4 horsemen. Horseman number 3 is timing the market. And political market timing, right? Should we get it in or out of the market based on elections, based on who's in office, is a symptom of deceit and fear. And I can try to stop the symptom, right? I can say don't sell or don't buy or just stay the course. But it's way more effective to cut off the cause. It's way more effective to tell you, here's why. Right? Not just don't do it, but here's why. So I want to at least give you an alternative, right? Here's all the things you shouldn't do. Don't politics, don't listen to things. Here's the alternative, right? Rather than consuming the negative, outrage-inducing, fear-mongering media that's out there, consume our media, right? Retire Membership is a weekly email or podcast. It's a private podcast, and much of it is simply an antidote to negativity, right? It's on investing, it's on finance, but a lot of it's just on the good things that are happening out there that you're just not going to get in the news, right? So it's always free. You can join for free at retiremembership.com. There will be links in the description of the podcast, links in the description of the YouTube video, and you can always find all links, everything, all the charts, all the videos and reposts of everything on our blog, retirementorship.com/177. This is the 177th episode, and so you can find it all there. Don't let fear and politics drive your decisions. Focus on what really matters. Delegate all that trash to the people who are in charge, and stay successfully retired. Stay the course. We'll see you next time. Cheers.